In today's weekly forecasting series, we're going to be breaking down some of the technical analysis, fundamental analysis, and all the major pairs that I'm looking at in the up and coming week. So jumping straight into the charts, we are on the DXY on the weekly time frame. We've had this order block marked out for a while and we've been looking to trade lower due to the fact that the Fed were looking to drop the rates all in this price action, and they actually did release a 25 basis point cut. So that sort of led the bias to a bit of more of a dovish stance, looking for short dollar. So with saying this, we did mark out some potential liquidity points that we wanted to target, and we actually did get a break below this low here, which is external range, and then we swept that, and we have currently closed within this range. So as I mentioned the other week, we were trading the USDCHF, where we come up into this weekly order block, swept the previous week's high, traded lower. And I got out here actually, and covering a bit on why I got out here, and it's actually sort of proven itself. The FOMC statement come out a couple of weeks ago where the Federal Reserve actually spoke a bit more about the risk in America, and they said that they have, sort of an unemployment problem. However, they are still struggling with the inflationary measures that are, taking place within the US economy, which means that the inflation is still above their 2% target where they currently want it, and they're going to sort of try and draw that back within a more acceptable range. So it's a bit of a stagflationary period, which occurred in the 1970s in the US economy, which wasn't good, where unemployment and the labour market is struggling. However, inflation is still very high, so it's very hard to make a decision on whether you want to cut interest rates or keep them the same, if not raise them a bit to combat that inflation. So that's why I sort of got out in this area here, and it's proven to be, if we just go back to the DXY on the daily chart, a pretty good reason to get out, to be honest. I spoke a bit on never marrying a trade idea and always getting out where it made sense, and the confluences started to turn against you rather than just holding for a huge trade. You don't have to win everything in one trade. You can always let go where it doesn't make sense and then see how it reacts to sort of these key levels, which is definitely like this fair value gap here. I don't know where. Change the color of this to make it a bit clearer. So yeah, we monitored this area right here, because if we are still bearish, we want to be respecting bearish PD arrays. This fair value gap here was tagged, traded through, and then created the inverse, which then we have dropped back down Tuesday this week that's just gone. And again, as with ICT weekly profiling, we do know that on a bullish week, the low is likely to be placed in the early side of the week, which actually come in on the Tuesday, which is perfectly in line with the teachings there. So we ran sell side, we closed in here. This sort of close here is tipping its hand that the next day is going to be bullish. However, with us trading lower and the bias being lower, I didn't entertain any shorts from this area, just due to the fact that, again, it's so easy that we can hit this and trade down, or we can just disrespect this after taking external range liquidity here, which we actually did do. And now we've made an expansion leg higher towards this consolidation right here. And to be honest with you, if we mark out the external range high to low just from this point right here to see where we are, we have got room actually to move back in towards a premium, even if the overall sentiment for the dollar is still a bit lower. In my opinion, we still have really bad unemployment data at the minute that the Fed will look to sort of, manage effectively, even if the interest is going high, even if the inflation is still staying above their target is. So for now, with us being in a discount of this overall external range, I would mark out this right here for an OTE. I'd change that on my chart here, just go to OTE. This is where I'd be looking to sort of get long from now. We've had, the first leg of distribution from this area, this inverse fair value gap. We've traded up higher. We've expanded higher as well. We've closed lower on the Friday without taking this high. So we've not had a previous day's high sweep to close lower, which does sort of build a confluence that we are looking to accumulate within this area. And then come back maybe towards a discount to go higher again. If I drop down the time frame, that will be just, sort of low volume candles, and we could look to turtle soup this low to get long again, especially towards that premium area, even if we are overall bearish, because there's two things to a trade idea. You know, you want the fundamentals to be in line with your trade, but then you also need the technicals. If we're solely looking at this from a technical point of view, we've swept sell side liquidity, we've displaced higher from this area, we've let the first retracement go just to see how it reacted, we've respected this area with a weekly profile, and then we've expanded up again with the Friday closing within the range. So I definitely think that we could maybe get another leg higher at least to take out this initial consolidation if we were looking at this as a market maker buy model on a lower time frame. You know, sweep liquidity, displacement higher, first leg, and we've been trading higher ever since, and this was the consolidation that could be our final target just to get above, which would be a good confluence. So if we have a look at the bond yields, you know, we always want to see what these are doing. I've marked out this consolidation here. You know, we had a displacement leg lower, we've traded up a bit higher, but if we go on the weekly time frame, this is actually a weekly fair value gap, so this could be a potential reversal area for a lower dollar, which would be against that long idea that I've just shown. So being honest, if we have a look at the charts, things are a bit uncertain at the minute. We got out of this USDCHF trade when it made sense. We've swept sell side again on all these major USD pairs, and if we go to EURUSD, I actually did have this marked out on the chart because I thought this is a graded swing from this fair value gap. I'll just delete this fib for now. We come up and we tagged this fair value gap here. We made a displacement leg higher, and then I looked to get long on this. However, this was a loser, which is completely fine. There's nothing wrong with a loss. I managed the risk effectively. It was in line with the technical idea that I was going to trade this range from high to low. You know, if you actually question if you guys trade ICT concepts, I'm not sure if you do, but if you do, you'll know what a market structure shift is. How many times does a daily market structure shift occur? And the answer to that is at least less than an optimal trade entry comes. So with a model, you always want to make sure that you're following the data points rather than just trading off of thinking everything is a reversal. I know we had the inflationary numbers still high and employment data was bad, which is, you know, sort of contrasting confluence, which isn't always good. However, you have to take your model when it presents itself, and this is just one of them cases where I actually refine the fib to this level here, because if this level goes, then I believe that this low would have gone, which it did. And it's just an entry that's, you know, bread and butter. And now with this market structure shift through this low, we've displaced this low, I'll definitely be looking at this area now to get short on, at least to this consolidation, as pointed out inversely on the DXY. So to summarize the technical aspect of the trading ideas, I would be a bit on my hands at the minute with an overall bias on whether we're going to be overall bullish or bearish. However, I do think there is room within this area for it to see how price trades off of this area. Now we'll see more early week if we see that we're trading down lower on the Monday and the Tuesday, maybe a Monday candle like this. Let me just get the path tool out for you guys. Delete this, get the path tool. So Monday could maybe just be a small range day. If Tuesday sweeps Monday's low and trades away, then we could have a breaker block here to trade higher. So that would be the idea, basically. This breaker could be a nice entry point. But again, we need to monitor how price trades earlier on in the week. So looking to the Forex factory calendar just to see what we had in the last week. So this is the week that's just gone. We had not much on the Monday or the Tuesday. We had a few news drivers on this Tuesday. However, the real data that I pointed out last week was the unemployment claims, which, although was slightly better, is still very high unemployment. And we did have GDP come actually higher. And then we had the core PCE index, which was as expected. So, basically the data is still printing exactly how is expected in the market, which there's been no huge surprises from inflation data or unemployment. And then looking at the week up and coming, we have Monday, not very much news at all. Tuesday, again, it's a pretty quiet day. We have the JOLTS job openings at 3 o'clock, which might be a news driver for the London closed kill zone. However, I believe the main data will be the USD unemployment claims at the back end of the week, and then we obviously have the NFP. So intraday trading, especially in these environments where there is not many news drivers, early on in the week, and we don't have a overall full grasp on the data yet, whether we're going to be overall dovish or hawkish on the rates. We want to be positioning ourselves early on in the week if something technical presents itself. However, anything past Wednesday, the NFP, I just don't want to be involved in that price action. It's just going to be too choppy, too small ranges, and then just one candle that's going to go either way depending on the data points. So with the interest rates, I'm still overall bearish on the rates. I still think there's sentiment for a cut to come. The labour market is really struggling at the minute, and Trump, being a Republican, really wants to drive that economy forward and get businesses back on its feet. He's already said that it's time for a rate cut right now. We need to act on this fast. It's more the Federal Reserve, the Central Bank of America, that are withholding from dropping rates too low due to that inflation being a bit high. So I think NFP numbers will be a more telling sign next week. Sometimes it's good to give a week away from the charts if nothing's come sort of by Tuesday or Wednesday, just to position yourself with a bit more data and to understand a bit better what's happening in the overall economy. So that about covers my technical breakdown for this week's up and coming trading. I hope you guys found it useful. If you have any thoughts or confluences that have come across your mind within the past week, or you think that there's something up and coming that we should be aware of, or maybe I've covered rightly or wrongly, then please leave a comment. But other than that, have a safe week's trading.